Alrighty, guys, today we're going to start with the um, chapter 6. This is going to be a summary of what you're going to be doing in this chapter. We're going to be looking at the banking procedure and how we control cash. So typically in a company, we have the cash, right? And to have cash, of course, it's easily lost, stolen, or we have to make sure that we balance. For example, when you go to any store that they've got a cash register, they start off with a certain amount of money in the cash register. Then at the end of the day, they have to make sure that they have at least the money that they started out with, and then of course record any money that has been received above that. Typically, everything should go ahead and come in, and you shouldn't be um, short at all. Sometimes it seems that it is, but it's not. And you have to go ahead and establish a good control system of procedures, especially with what we call petty cash that we're going to be getting into, to ensure that you've got the correct amount of money with it that you start off with and that you end up with. Always making sure that you balance. So typically, if you have a petty cash where you've got a cash store, you want to make sure the responsibilities of the duties are divided, that you have to make sure that you've got all the receipts. That's why it's important to keep receipts to ensure that the amount of money that is coming in and going out is actually documented correctly. You also make sure that the employees are rotated, meaning that each one knows how to work the cash register as well as do the other duties so that you can rotate them to ensure, excuse me, that there's no um, embezzlement going on. You have to have your checks and balances. And of course, make sure that all the checks that are written or all the transactions that are done are authorized and that the bank accounts are always reconciled on a monthly basis. So here we go. When you start with a checking account, you start off with a signature to ensure that you have the correct signature on all checks. You're looking at your deposit slips, making sure that you deposit the amount of cash that you're putting into the bank, because that cash account that we have, we don't have that in the business. Typically, the money that is taken should be placed into a bank cash account. Um, it's hard um, to talk about checks when some of us don't have checks. We have a debit card. But either way, even if you have a debit card, there's money going out. So you need to make sure that the money is also coming in. And you need to make sure that everything is reconciled the way it's supposed to. Then you also have your credit cards as well, how much you have as far as payable that you have to pay in the future. But with the debit cards, you still have to make sure that, as with a check, that you're subtracting the amount of money that is in the cash account as you're paying it. So that's why you still have to have your general journal. So on your check, signing or stamping in the back of the check, showing to deposit only, um, uh, again, provides that information that it can only be deposited. Now we have our checks. Some of us have our checks electronically transferred into an account so that we don't really see our check. We just see the electronic portion of the check that's being deposited. But either way, when you have your check that's being deposited, you got to make sure that it's correct and it's the correct amount as well, and that it's deposited into the correct account. So you have a blank endorsement which does not specify how much or who is supposed to endorse it. You have a full endorsement where you have to sign on the back of the check, indicates the name of the entity who the check is going to be paid, meaning if I'm getting paid on accounts receivable, then I put my name on the back of the check to make sure that it's going to go into my account. And then there's a restrictive endorsement. Those are the ones I'm saying that it is for deposit only, meaning if you're going to deposit a check, there are times that you're going to say, okay, I want to deposit this check, but I want $20 or $30. But you can make it to where if you're only depositing a check that is restrictive and you're saying for deposit only, meaning that there's no money coming back as well. So again, here we see the types: signature, Pay to the order of the Sunshine Bank, Becca's Jewelry Store, showing again that is a full endorsement. And then you're restricted. Pay again to the bank, but for deposit only. So meaning that you're depositing this check for deposit only, that nothing else can happen. And then you've got your account on that check as well. Now, when we do the journal entry, okay, we do the entry to cash to deposit the proceeds of the cash sale. So notice you have your sales, so you deposit $500 into cash and into sales, recording the fact that you did have so many sales. Then, of course, to record the collection, if you received any money for accounts receivable, you're going to then debit your cash, credit your accounts receivable as well, because you've got money coming in, and you're decreasing the accounts receivable account. Other sources of revenue, of course, is your credit cards. The drawback again is that we have to pay a fee, okay, for putting things on a credit card. Another way of saying that I'm going to pay you back, but I'm going to pay you later. Well, the companies aren't just going to lend your money just for because of it. They're lending money because they're going to then have a interest on it at the end to ensure that you're going to go ahead and pay them not only for lending you money, but the process of lending you money costs this much. They have to be able to make their revenue as well. Debit cards, again, issued by the banks. The debit card, though, is not an extension of credit. It's just saying that you have this amount in the bank, and that's all that you can use. The credit card is different. And even with a credit card, you have limited credit cards as far as how much you can have on balance before your credit card will not allow you to charge anymore, and you have to make a deposit, okay? I mean, or not make a deposit, you have to pay on your credit card. The checkbook, again, acts like a debit card, except that it's a paper check. You list who you're going to pay. The check is written and signed by the drawer, meaning me. I'm telling the bank, the Wells Fargo, I'm telling the bank, I want you to pay Walmart this amount of money. And then I sign endorsing the check saying that, yes, this is what I want to do. So again, it goes through the bank, notices that I've got money there, pays Walmart, everybody's happy, okay? Canceled checks, of course, are the ones that have already been processed by the bank and can no longer be negotiable. In other words, Walmart can't put that check through again unless there's no money in the bank and I haven't deposited yet. It's still going to go put it through until it gets it. That's when you get into a lot of trouble because of processing fees and what are called insufficient funds in your account. So here we go. This is the copy of a check. This is typically a check for business where you're going to have a record of the check that you're doing, keeping your balance forward, and again, making sure that this information is then transferred into your general journal. The total that you have, the total of this payment or this check, and of course, the balance forward or how much you're going to have left after taking those $500 out. This is the company check. This is the bank or the what was saying the drawee, because I am the drawer, Becca's Jewelry Store. The drawee right here saying I want you to go ahead and pay Ziegler Wholesales this amount of money on this day. Okay, the check number, the code number to identify the bank. This is what that is. The written amount also, the signature of the person. The line is drawn to fill up the space to ensure that nobody else puts anything else in there. The check number that is pre-printed. This is your account right here that's been getting out, that the money's getting out of. And then this is your identification, which designates the reserve, Federal Reserve, the identifies the Reserve Checking Processing Center, identifies the state, and then identifies the bank, and then 3 is used for the computer checking, which is here. All of that is in this check, and all of that information is done and it's processed through the bank. If there's an amount mismatch, it's usually because the written amount of the check does not match the amount expressed in figures, okay? Here, this does not match this. If it doesn't match, then the bank may pay the amount that's written in words or return the check unpaid. It may contact the drawer or the company to see, okay, what did you intend to do here? What needs to be done? In the company records, the transactions are done that are affecting the checkbook balance. So you see the bank deposits made for April, the money that you're putting in the cash, and then of course the check numbers and all the money that is being paid out. Okay? Your bank statement reflects all of that. Starts off with the beginning balance, then it shows you the checks that were paid, those that have come through, any deposits that were received also, and other charges or additions indicated by the codes. Now remember though, this is going to be for 1 month. So from January 1st to January the 31st, what has been the transactions going in and out. So this is what the bank statement looks like. Notice again, it's the Sunshine Bank, the account number, closing period, the day by that day, the account number or the account person. The balance was 0. The amount of checks, the service charges, because they've got to make their money as well, okay? The added deposits, and then making your present balance a certain amount. So they're going to show you how they got to this amount right here. So here where you start off, you have $5,000. Then, of course, you see the checks, okay, that are going out, $500, $400, $800, $199. Here showing that you took money out from the ATM. And then again, your service charge. It's showing all of the deposits that you had as well. So here is your running total, getting to the amount that you have right here on the bank statement. So now what you're supposed to do is reconcile any checks that have not gone through to come to a correct balance, okay? So again, this is where we look at the bank reconciliation, where we're doing the process of calculating the deposits in transit, meaning those that the money that has not hit the bank yet that you deposited but hasn't been recorded by the bank, and any outstanding checks. So on the back of that statement, this is where you have a check number. Let's say that you have it outstanding. It hasn't gone through the bank, so you record it. So the 3542 that you have from the bank that is shown on the statement, any deposits that haven't been recorded as well, you put in, you add, then you deduct this number of this check that still hasn't gone through the bank. So you come up with your new adjusted balance that should then match what you're doing in your journal entries as well. So that you can make sure that, again, your checks and balances are going through. If there's any additional transactions, like I said, non-sufficient funds, a debit memorandum, a deduction from the account, a credit memorandum, an increase in the amount as well, depending on anything that has been going through. If it's a savings account, showing the fact that you've got now interest added, so that you'll see how much money you're actually making in the savings account. So the step-by-step transactions are: prepare the list of deposits in transit, meaning those that have not gone through the bank. Prepare any outstanding checks, those checks that have not been seen in the account in the bank statement. Record any bank charges, again, what I've been charged as far as fees. Compute the balance. Enter the balance on the reconciliation. Total deposits, total outstanding. Compute the reconciliation. And the result, again, should equal your general ledger, your journal and your general ledger for cash on the cash account. Okay. Now we do have the electronic funds where automatically funds are turned in, and we do have the ATMs. Now remember, every single time that you withdraw money, the bank statement should have the ATM there as well. You need to make sure that you take that slip of paper whenever you, or your receipt, whenever you do ATM transactions and add them to the general journal so that you can then add it to your general ledger as well on the date. The advantages of the online banking, of course, are the fact that you can, um, the online banks never closes. It's 24/7. There's a huge transaction speed, which is great. But again, because those transaction speeds are pretty quick, you need to make sure that you've got money in the bank as well. Okay. It's efficient. You can manage everything on a secure site because it's all secured. And then, of course, you can also go ahead and now it has sophisticated tools to help you manage all of your assets more frequently and effectively as well. The disadvantages, okay, um, the startup time may take time to register. You'll have to provide some personal information. You have to, there is a learning curve. Sometimes it's difficult to navigate the online uh, banking information. If there's any changes, you have to, and they upgrade their online programs, and of course, you have to go ahead and uh, have another training or learning curve as well. And the biggest thing, of course, is to trust the online banking, trust what's happening, and make sure that everything's okay. All right? I'm going to stop right here so you can review this video again, and then we're going to continue with chapter 6, part